Good afternoon, everybody. Brandon Davis here with AmeriFirst Home Mortgage. I want to talk to you a little bit about some mortgage ideas, and in particular something that I refer to as mortgage strategy. And so you might be thinking, what is mortgage strategy? Why do we use it? What do we do? What's it entail? And one of the main things that you want to realize when you're either buying a home or you're refinancing a home, there are several different options to be able to consider when doing so, and you want to make sure as best possible that you're using the options that are aligned with the most financial sense. And you may think you know what you're doing, and then at the same time, if you have some direction, some strategy associated with that, you may actually change your mind. And so for our team, what we do is we encourage people to either remotely through technology, Zoom, some of the things that are going to put us in a position to be able to talk about what these ideas are can be done just like we're doing today. We can do that with the ability to do Zoom financing details, and in addition to that, we can talk about things related to a conference call, just your old school way of being able to learn about what it is that you're doing. So what is a strategy meeting? So as an example, one of the things that I have been referring to recently is a net calculation, and that would be something that's referencing a refinance. And so we helped a couple a few years back purchase a home, and we helped them renovate the home. And they did a strategy meeting to learn how to buy it and what to do to renovate. They put on an addition to the home, and it's right here in Northeast Ohio. And it's about a half hour from our office. And so what we did was we sat down, we talked to them about the pros and cons of different types of loans to consider. They ended up purchasing a home that wasn't exactly right for them, but they could see through the strategies that we had shared what that home would present to them if indeed they did add on a master bath, a master bedroom, and a den. And so they did that. And a few years back, that all made sense to them. Their family was expanding, and in doing so, they decided that purchasing a home and doing renovation, based on the price point that they were looking at in the community that they bought, made more sense than buying a home that was more expensive. There are some details that go into that, but again, that's strategy. So mortgage strategy associated with refinancing, why then does that make sense to get together so soon after they did the purchase and talk about things related to refinancing? Well, here's why. We produce something called a net. And at the top, you're going to notice the present terms, and then you're going to notice the options associated with what three things are available to them based on a refinance to a 30-year, a refinance to a 25-year, and a refinance to a 20-year. And what you can notice is, not even 2 years into their loan, some of the money that they're able to save. And so what I talked about previously was a net analysis to determine what was the benefit to them being able to do a refinance. So they purchased the house, there was a rate associated with that purchase, there was an APR associated with that purchase, and there were costs associated with that loan. And that produces net calculations on principal and interest payments, how much money in the transaction actually exchanged hands, and we compare that to a new analysis. And some of the things that you just saw, in fact, the last example is the one that they chose. They can essentially keep their payment the same and save $106,000 net, new loan to old loan, at an interest rate of 2.5%. In this case, it's 2.75%. And so that produces the rate conversation. Yes, the rate is lower. And if you only talk about interest rate, you will lose sight, or you will not have as much insight on the catalyst to the money. And so when you're trying to figure out whether you're purchasing a home or whether you're refinancing a home, what is the best scenario to consider? Rate is an extremely important part of that conversation. It's not the most important. The most important piece is the money. You must monetize in order to make sound financial decisions. You must monetize that rate conversation and learn what then becomes of the decision that you're getting ready to make at certain points throughout time. And so most people in today's instant gratification world, you want to know something quick, you want to push a button, you want to get a mortgage, we offer you those opportunities. And at the same time, the next step, once that scenario is done, you have your pre-approval in hand, is to then take a deep breath and learn what it is that you're getting ready to do through mortgage strategy. And that does not necessarily need to be accomplished prior to loan application, although that's ideal. It can be accomplished at loan application. And so you may already be under contract. You may be trying to learn what is the most sound financial decision to make. And so just in the last 2 days at different loan application meetings, we have offered different scenarios and different strategies associated with buying those homes in ways that are not aligned, all three people looking at the same scenarios, A, and B, each individual is going to have different scenarios to consider looking at related to that strategy. Here's what I mean. The initial page was a net-net calculation. Okay? However, what we then do is we take those net-net calculations and we run scenarios so that you can begin to see graphically how do they compare. And without going through each step, what it begins to show are ways that you can digest that monetary decision that you're getting ready to make so that it's more sound and fundamental in your own mind as you're getting ready to decide one of the most important decisions that you're ever going to do is a mortgage transaction in your adult life. And some people only do that one time. And if you're one of those people that does it a few more times than once, then it probably makes most sense to compare where you are in the market today versus what you did previously. And so, as you're trying to learn about what loan makes most sense, remember that strategy will help you to determine which loan to continue with closing. But it does not tell you in the beginning, if you only pay attention to interest rate, it does not tell you how does that monetize. For example, some common things in the industry, especially with competition, folks that do not offer renovation lending, is you might not want to do that loan because the interest rate is higher. And yet, for the average person, as soon as they hear that interest rate is higher, it triggers fear. It triggers doubt as to why they might want to consider doing that loan with a higher interest rate versus another loan with a lower interest rate. Well, maybe you could buy this house at a depressed value. Maybe you could improve the value through renovations. And maybe then you have equity at the end of the rainbow, if you will. So if you buy a house for $100,000, you put $50,000 into it, that's $150,000 net in the transaction that you have to account for. Except if the house appraises at $175,000, you have a $25,000 head start that you then get to use. And part of the reason why that makes sense, especially with renovation lending, is because you are putting money, heavy balances of loans, at mortgage money, which costs you about $5, $4, or $6 per every $1,000, depending on the loan program that you're going to do. Said another way, I met with a couple this morning that was buying a house. And so they were trying to decide whether they were going to put down $50,000 or $15,000. And so the difference between those monies is an amount of money that not only is today's value, so $50,000 less in a loan balance only equates to about $225 a month in a decreased payment. But if you take that same $50,000 and you talk to a financial planner and you put it in an account that's going to yield about a 7% return, which most financial planners will tell you over time, historically speaking in the marketplace, that's responsible. That same $50,000 in a 4-year period of time will yield $66,000. So would you rather have $66,000 for the $50,000 you didn't give me 4 years from now, or would you rather have a payment that's $225 lower? Hard to say on this video, but that's the strategy ideas that we discuss when we meet. And so when you're considering refinancing, it's not just about rate, it's not just about closing costs. Those things matter. What really matters is the net analysis of loan A versus the options that you have, maybe B, C, and D, comparing to loan A, so that you will know then, okay, this is the strategy that I want to go with based on money. And that's what we earn, that's what we pay our bills with, that's how we live our life. And so while interest rate is important, it is not the end-all, do-all. So what I'm here to tell you today is, if you're buying a house, or if you're considering refinancing a house that you already own, what you really want to begin to understand is the net analysis of how much money you're going to save, or the net analysis of how much money you're going to spend if you're buying a house to get into that transaction. One of the last things that I'll leave you with is, this morning I was able to pick up a loan application for a financial planner. The reason that we were able to have the discussion was because the net analysis that was shared, plus their own calculations that they were doing, what happened was their own calculations looked very similar, almost identical to some of the things that I was giving them. And so through that, we developed some synergy in conversation, those strategies made sense, and we reduced an interest rate by almost 2%. Now, while that 2% scenario does make sense, what we don't really talk about here in too much detail is the fact that they were already paying more than their minimum payment in the original loan. So we had to account for that in the analysis. And so when you're considering working with our team, and our team is in Poland, Ohio, here in Northeast Ohio, with AmeriFirst Home Mortgage, we really encourage you to either remotely, like we're doing today, or in person, spend some time to learn about a strategy, and then what can you do with that learned information to make the best decision possible financially for you to be able to either refinance or purchase your property the right way. My name is Brandon Davis, and I'm with AmeriFirst Home Mortgage right here in Poland, Ohio. And you can reach me at 330-565-9013. Thanks for watching. Y'all be well.